Vedanta's reverse book building process begins today and it will go on till the 9th of October. So if you're a shareholder of Vedanta Limited, you may have received a letter of offer from Vedanta asking you to tender in your shares, and more specifically the price at which you'd like to tender in your shares, because it's on that basis that Vedanta will decide the final delisting price. That's the price that you will get for your shareholders. Remember, the math of the delisting works as such that the equity share at which Vedanta reaches 90% in terms of promoter holding is the price which will be called as the exit price. Now, the timeline is such that the promoter group must declare whether the delisting was a success or a failure by the 16th of October, and by 23rd of October, the consideration will be paid to the public shareholders. The key question here is now, especially for shareholders of Vedanta, the retail shareholders, what should be the price that they should tender in their shares at? Vedanta Resources, on its part, has already raised a little over $3 billion, largely, of course, to fund this delisting. But remember, they also have some debt on their books. And, I'm sure a little bit of the money will go towards reducing that debt as well. However, Motilal Oswal says that if 100% of this money is used towards delisting, that puts the value that Vedanta has sort of kept aside for this delisting at roughly about 137 rupees per share. That's roughly where the current market price is. Now, as per SEBI, the floor price at which the delisting price cannot go below is the book value, which again Motilal Oswal pegs it at 89 rupees. But remember, in the previous quarter, Vedanta had written off almost more than 17,000 crore rupees, citing that, there's been a sharp drop in metal prices and, crude prices, because of which, largely crude prices actually, because of which their oil and gas business had to take this write-off. But it is something that did lead to the book value sort of falling. However, we did have a corporate governance advisory and proxy research firm, SES, which believes that shareholders must keep in mind the range of 236 to 310 rupees per share when they are putting down a number on that letter of offer form or that bidding form. In fact, they say that even in a worst case scenario, let's say, we're in a depressed economic environment and, we have sort of all of this economic uncertainty. So even in that, taking into consideration all those negatives, according to SES, shareholders must bid 200 to 250 rupees, but not below that. They also say that, look, don't go as per things like book value, etc. You must be guided by what you think is a proper value for the share price. And it notes a couple of points. Firstly, they believe that this current market price of 135 rupees is not a fair one according to them, because it does not reflect the true value given the market situation and the holding company discount. Also, they say that each share of Vedanta actually has 0.74 of Hindustan Zinc embedded, because remember, Vedanta has a majority stake in a publicly listed firm, Hindustan Zinc, which is also cash rich. So they believe, and Hindustan Zinc, by the way, is at 145 rupees. So they think that Vedanta's share, even if, let's say, we consider all the other assets to be valued at zero, should be at least 145 rupees per share. And finally, they also speak about the dividend issued by Hindustan Zinc, which was at almost 12 rupees per share of Vedanta at a yield of 5% post-tax, which in itself gives a price of 180 rupees. So yet again, another sort of flaw being put by SES on the value of Vedanta. So SES strongly advocates all shareholders of Vedanta to put in a figure of, somewhere between 200 to 250 rupees, taking into consideration, of course, this worst case economic scenario. But according to them, they should also keep in mind a value of 236 to 310 rupees per share when they are putting in the bid figure in the delisting form.